The shares in Asia were mixed on Friday, with Chinese markets slipping even as official trade data came in soaring past expectations. Mainland Chinese shares were lower, with the Shanghai Composite dipping just below the flat line to 3,188.63 and the Shenzhen Component declining 0.26%. Meanwhile, Hong Kong's Hang Seng Index slipped 0.22% as shares of Tencent and AIA fell. Other Asian markets that closed before the data release saw gains, with the Nikkei 225 in Japan rising 0.73%. In South Korea, the Kospi rose 0.41%, while the ASX 200 in Australia added 0.85%. Of course, U.S. stock index futures rose on Friday as the corporate earnings season kicked off with stronger than expected results from banking giant J.P. Morgan Chase. At about 7:05 a.m. Eastern Time, the Dow Jones Industrial Average Futures rose 175 points, and that indicated a gain of 166 points at the open. Futures on the S&P 500 and the Nasdaq 100 also traded higher. But J.P. Morgan Chase jumped more than 2% in the pre-market as Wall Street cheered the company's quarterly numbers. The bank's better-than-forecast profit was driven by the impact of higher rates. Wells Fargo is also scheduled to release its first quarter earnings later today. On the data front, import prices for March and consumer sentiment figures for April will be published, of course, today. Now let's take a breather from those numbers. The new president of the World Bank, Mr. David Malpass, projects a per capita income growth of below 1% for sub-Saharan Africa until at least 2021, raising the risk of extreme poverty on the continent. In his first address at the ongoing spring meetings of the International Monetary Fund and the World Bank, Mr. Malpass calls for urgent action by countries in the region and the global community to achieve the World Bank's primary goal of ending extreme poverty by 2030.
Per capita income in growth in sub-Saharan Africa as a whole is now projected to stay below 1% until at least 2021, which elevates the risk of a further concentration of extreme poverty on the continent. Growth in median income will also be weak. This fact is extremely troubling because it jeopardizes the World Bank's primary goal of ending extreme poverty by 2030. Globally, extreme poverty has dropped to 700 million at the last count. That's down from much higher levels in the 1990s and 2000s. But the number of people living in extreme poverty is on the rise in sub-Saharan Africa. By 2030, nearly 9 in 10 extremely poor people will be Africans, and half of the world's poor will be living in fragile and conflict-affected settings. This calls for urgent action by countries themselves and by the global community. Fortunately, the World Bank Group is financially strong, and with the capital package, which was agreed to a year ago at the spring meetings and which I was proud to support, the organization is becoming even more responsive, efficient, and effective. This week at the World Bank Group, we at the World Bank Group have joined the IMF in welcoming our 189 shareholders to the spring meetings. I've already begun meeting with member countries and other stakeholders to discuss the challenges ahead and to advance the broader global development agenda. Corruption efforts are a key part of designing good, transparent programs, and so illicit flows take many forms and are a big challenge, and they also suck resources away from poor people and from the ability of a country to really grow and develop. So it's something that the bank has the bank has not nearly enough, but expanding strength in helping people think about how to best keep track of financial flows and make sure that they're legitimate financial flows. This takes the form of technical assistance. It takes the form of close cooperation with the financial officials in the country, and it's something countries, I think, are rising to the challenge and trying to make it work better, but clearly more can always be done. I guess I'd I'd like to put this into the context. I'm enthusiastic about the job that I've undertaken. I'm deeply honored to be here and to tackle these challenges. And as we've talked today, there's a wide range of challenges that the developing countries face and that the World Bank can work every day on to be as effective as possible.
Meanwhile, the Managing Director of the International Monetary Fund, Christine Lagarde, has asked the federal government to remove fuel subsidy, saying it's the right thing to do. The IMF boss believes with the low revenue mobilization that exists in Nigeria in terms of tax to gross domestic products, it's important for the country to remove fuel subsidy.
I'll give you the general principle. For various reasons, and as a general principle, we believe that removing fossil fuel subsidies is the right way to go. If you look at our numbers from 2015, it's no less than about $5.2 trillion that are spent on fuel subsidies and the consequences thereof. And the Fiscal Affairs Department has actually identified, how much would have been saved fiscally, but also in terms of human life, if there had been the right price on carbon emission as of 2015. Numbers are quite staggering. If that was to happen, then there would be more public spending available to build hospitals, to build roads, to build schools, and to support education and health for the people. Now, how this is done is the more complicated path, because there has to be a social protection safety net that is in place so that the most exposed in the population do not take the brunt of those removal of subsidies principle. So that's the position we take. I would add as a footnote, as far as Nigeria is concerned, that with the low revenue mobilization that exists in the country, in terms of tax to GDP, Nigeria is amongst the lowest.
Still to come on the program, we'll get more updates from the Nigerian Stock Exchange. Do stay with us.